Yes, ma'am. He's my wife. Students, is my voice is audible?
Yes, ma'am.
Okay. Within 2 minutes, we'll begin the class. Okay. Actually, it is 7:15. So we'll begin the class by 7:15 to 8:15. We have a class. Okay. How many members you have attended in the first class, ma?
Total is 7 members, ma'am.
Okay, 6 to 7 members. I think now also the strength is same. Okay, we can begin then. We will begin the class, ma. Wait for a while. His screen is visible, ma?
Yes, ma'am.
Okay, fine. Okay, just wait. Yes, ma. Good evening, one and all.
Good evening, ma'am.
Good evening. Myself, I am Dr. N. Shweta, madam. So, for you, I am going to deal auditing subject. So, today we will discuss block one. Okay, in the given time stipulation, we will discuss block one. I request all the participants, you have to cooperate with the teachers and you have to put your mics silent. So, last 10 minutes, we will discuss. Okay, follow the protocol, ma. All of you. Are you able to hear me?
Yes, ma'am.
Okay, fine. We will begin the class. So the block one, it states about basics of auditing. So what is auditing? Auditing means here, it is derived from Latin word adire, which means to hear. So we hear something from the auditor. What is that something? We hear the financial aspects of the business concern. So audit is defined as an investigation of some statements. What are those statements, ma? Financial statements. Investigation of financial statements of figures involving examination of certain evidence. Say, for example, auditor is analyzing the financial performance of a company. So, supporting evidence documents he will consider. What is that? Either it may be profit and loss account, or it may be balance sheet, or it may be identifying the trial balance details. So, the supporting evidence he will consider, and then he will come to a decision to write a report. So audit means what here? Audit is derived from a Latin word adire, which means to hear. So the role of auditor is to examine the financial statements and to give a report to the top level management. Is it clear, ma?
Yes, ma'am.
Okay. So now we discuss essential features of audit. So the basic characteristic feature of auditor is to examine in a systematic process. It means what here? The auditor has to follow the logical and scientific process in order to examine logic. He has to consider the logic. For example, we need to analyze the performance of financial performance. So what is the logic behind the financial performance? The supporting evidences are the logic they have to consider. So it is a systematic process in that way. Next here, we have an audit is the examination of all the books of accounts and financial information of the organization. The main purpose of auditing is to examine the books of accounts. Books of accounts contains the like just now we discussed P&L account or balance sheet, or we take any account details. So Audit is the examination of financial information. Next, the audit helps to collect various source of information. So with the help of auditing, we can pool the information. We can pool the information of the organizational financial performance. Next, objectives of audit. So the audit objectives are classified into two types, primary and subsidiary. Primary means the foremost important objectives is known as primary objectives. Secondary, subsidiary means here secondary objectives. So primary objectives deals with examining the system of internal check. So internal check means here verifying whether the postings of transactions done properly or not, balancing is done according to the norms or not, rules of the accounting. Next, second primary objective is to verify the authenticity and validity of transaction. So here authenticity means exactness, validness of the transaction. See, checking whether the capital and revenue nature transactions are recorded, whether they are deviated or differentiated or not, like confirming the existing value of assets and liabilities. So assessing these assets and liabilities and confirming the capital and revenue nature transactions will fall under the verifying the authenticity and validity of transactions. Primary objectives are examining the system of internal check, verifying the authenticity and validity of transactions. And the third primary objective is whether the statutory requirements, like for example fairness in results. Statutory means here it states according to the norms the organization implemented their prepared their accounts or not, followed their rules or not, they will assess. So that is the three objectives of audit, primary objectives. Now we discuss secondary objectives of audit. So after completing the primary objectives, the auditor will come to the role of performing the secondary objectives. Those are like preventing the errors. Generally, when we post any transactions, there are sometimes there will be chances of committing errors or mistakes. So we need to assess and we need to identify the mistakes at that period only, so that at the end of the financial year we will be in a safe zone. At that time there will be error free transactions. Next, detection and prevention of frauds. If any frauds involved, then here that frauds must be assessed at that point of time only. So the main job of auditor is to identify the frauds. So we discuss what type of frauds will takes place generally in the organization. See, as auditing deals with the financial performance, financial transactions, generally frauds may take place in the misappropriation of cash. If the cash the cash is recorded incorrectly, then if the goods are not recorded properly, that is also one of the fraud. And if accounts are not maintained according to rules, that is also one of the fraud. So now we will I will give a next ppt, it is about frauds. Now here, like misappropriation of cash, misappropriation of goods, misappropriation, manipulation of accounts, or false accounts without any misappropriation. So here, cash transactions and goods transactions and accounts maintenance must be done correctly or maintained accurately, authenticity, so that here we at that point of time only we can identify the errors or frauds. Then next, other objectives of audit. So the main purpose of auditing is to provide information to the income tax authorities. So the company a company is liable to pay the tax to the income tax authorities. So it will provide the accounts details, the overall performance of a company with the help of audit. And the audit has to satisfy the provisions. It means rules and regulations mentioned in the Companies Act. And the audit will have a moral effect. Next, advantages of auditing. So auditing will give some kind of assurance to the owners and investors. Owners and investors, they expect proper maintenance of the business. So for that sake, the owners and investors will see the auditing performance. So they can assess the company performance only by the auditing. And another advantage is here, it offers some assurance to the owners and investors, like shareholders, like equity shareholders, preference shareholders, debenture shareholders. There are various shareholders now, so they get some confidence with the help of auditing, either to invest or not. The generally the shareholders will see the past 5 years or past 3 years performance of a company in order to invest in the particular company, whether whether the graph performance of organization is in profits or is in losses or is in a break even point. The investors will assess when they want to invest in the companies. Next, the another advantage is here, with the help of audit, it will be helpful to the various departments in the organization to know the profitability and to know the performance of the business operations. Next, we have another objectives is here. We can also detect errors and frauds, and auditing will give independence in the transactions. Next, moral check. The another advantage of auditing is to the staff and workers of the company. The auditing will provide a clear picture, and auditing reduces the chances of frauds which will be done in the company. Next, limitations of auditing. So as auditing, it is a process. Sometimes the other side of the auditing is here. If we discuss the limitations of the auditing, we can say that it is costly. Appointing an auditor and giving salary to them and take caring about all the transactions and all. Sometimes it is time taking and costly affair. And but though it is costly, though it is time taking, but to reduce the frauds in a company, the auditing is essential in order to have a growth in the company. Auditing is essential for every company. Are you following, all of you?
Yes, ma'am.
Okay, fine, fine. So till now we have discussed introduction to auditing, definition to auditing, advantages of auditing, limitations of auditing. Next, role of auditor in detecting errors and frauds. So generally the main task of auditor is to identify frauds. If frauds are done, if transactions are not recorded properly, then the auditor role begins here. So we will say that there is a principle that auditor is a like a watchdog. He observes everything in the organization, in every corner of the company, what is going on, the auditor will observe. Next, error of principle. The first kind of detecting error is here. So whether the transactions are done according to principles of accounting or not, they need to auditor need to check out. So these errors may be committed unintentionally sometimes. Sometimes misrecording or some unintentionally it will take place. So the auditor role is to identify, pick up such a type of transactions. Next, for example, we can take providing excessive or inadequate depreciation, recording inadequate depreciation, that will fall under error of principle. Next, error of omission. So error of omission is like while entering the recording the transactions in the books, whether transactions sometimes totally omitted to record in the books of accounts, and sometimes it can be detected in the trial balance. And such errors, identifying such errors will become a big task to the auditor. Error of omission means here sometimes recording the transactions will not be done. Sometimes they miss to record the transaction. So that is known as omission, omitting. We are omitting certain transaction. It affects the organizational financial performance. So here I have quoted examples like where total of purchase day book or sales day book omitted to be posted in the purchase or sales account. So purchases details, if we missed to record in the purchase book, and in the sales day book, in the sales day book, if we are not recording the sales transactions, then it affects the performance, financial performance of the organization. Next, error of duplication. In the name itself, duplication. So here if at all for example duplicatedly, if we are recorded twice, like duplicate copy, like purchase invoice or any transaction, if we record it twice, then it reflects the various accounts. So such type of errors must be detected by the auditor, so that there will be accuracy in the transactions. Next, errors of commission, like purchase of goods for rupees 25,000. Wrongly, if we entered it as 2,500 in the purchase book, so it is known as here error of commission. Next, here compensating errors. So compensating errors means like for example total of debit account as well as credit account totally short by 7,500. Then total of debit and credit account totally shortened by the 7,500 or by the 5,000. Then such a type of, see, two accounts are being reflecting here, like debit and credit accounts are being reflecting. So when the effect of an error compensates with another error, so it is recorded in an error in the debit account and it is recorded as an error in the credit account. So the compensating errors is known as here compensating errors. Compensating errors is done in the two accounts. Next, in this unit, some important questions I have quoted here. Just to take the screenshots, ma. If you are listening in the mobiles, just take the screenshots of these questions. Esma, are you there?
Yes, ma'am.
Take the screenshot or camera. In the camera, you take the pic.
Okay, ma'am.
Important questions.
Yes, ma'am.
Okay, done? All of you. Is it done?
Yes, ma'am.
Okay, fine. So we discuss the next one, classification of audit. So auditing is classified into statutory and non-statutory audit. Statutory audit means it is done for specific type of entries. See, for example, banking institutions, they record the financial statements. So it is done for a specific, see, for example, companies transactions in the last 1 month, if at all, if we want to know. So it is if it is done, it is for we are doing that transactions, we are trying to know the transactions for a specific reason, to know the transactions in a particular month or in the financial year. So that is known as statutory audit. So statutory audit is referring to an audit of financial statements for specific type of entries, to know the specific type of entries. Those specific type of entries are here financial statements. Next, non-statutory audit. So non-statutory audit is an audit. So it is different from statutory audit, and entity need engage with audit to perform the review in the financial statements. To analyze the overall review of the financial statements, we go for non-statutory audit. So the main goal of non-statutory audit is to review the overall transactions, and based on that reviews, one opinion will be framed. We get an opinion about the organization performance. So with that opinion, so we take it, it will be helpful to us to take the decisions. Yes, ma, are you following? All of you.
Yes, ma'am.
Okay. Next here, internal and external audit. So internal audit is an independent audit. So generally, to know the internal control and to know the risk management process in an organization, so that will be assessed by the internal auditing. So generally, it can be the internal audit can be done with the support of board of directors and top level management personnel. Next here, external audit. So external audit gives assurance. See, for example, the company is being audited by so and so auditor. That is the external audit. So it gives an idea about the overall financial performance, and overall we can take the financial advisories with the help of external audit. Next, interim, final, and continuous audit. So, see, interim means here when an auditing is done for a particular date, for on a particular date within the accounting period. So that is known as here interim audit. Interim audit is an audit where we tries to know the particular date details of a company, and that particular date must be fall within the accounting period. That is known as here interim audit. So final audit. So next category is final audit. A final audit is an audit which is not commenced before the end of the financial period. It is not commenced, it is not done before the end of the financial period, and then it is carried on until it completes the financial transactions. See, for example, auditor examining the accounts of whole accounting year, whole accounting year details. So in a continuous mode, that is known as final audit. So generally the common type of audit will take place at the end, that is known as final audit. Next, continuous audit. Continuous audit means here every month and every quarterly, every half yearly, we tries to know the errors, or we tries to know the details of the transactions. So that is known as continuous audit. See, as we are the individuals, continuously we check our growth, we check our performance, we check our day-to-day growth or day-to-day status. That is known as here continuously we are assessing our details in order to reach our goals. Continuously we are monitoring our day-to-day activities. So that in the same way, organization continuously it will focus on detecting or identifying, or it focus on investigating the details of the company. That is known as here continuous audit. Next, we have types of audits and other objectives. Internal audit. So I think we have covered internal audit within the firm if audit is done, and financial audit normally performed by the external audit. Okay, internal audit we have covered. Next, cost audit. So cost audit according to the CIMA, Chartered Institute of Management Accountants of London. So cost audit means here verification of cost accounts. So there will be cost accounts now in the company to know the cost details. How much cost is incurring for the material and how much cost is incurring for the maintenance. So cost audit focuses on the costs in the organization, and based on that cost accounts, so the cost accounting plan will be done. So the main goal of cost audit is to reduce the expenses. Next, tax audit. Another type of audit is tax audit. So tax audit is a type of audit. So generally it can be done by the government tax department or tax authorities. So that is known as to know the company's tax payment details, we conduct the tax audit. Next, management audit. So management audit is to know the to take the decisions in the organization. Definitely it has to examine the performance of the company. Like we can consider objectives of the firm, policies of the firm, procedures of the firm, control and system in order to check the efficiency. So management audit covers overall internal aspects of the company. So it is essential in order to get an efficiency in the final audit. Next, social audit. So social audit, in the name itself, it contains the social responsibility of the company. And the social responsibility, corporate social responsibility, we will call it as corporate social responsibility. It means firm not only engaging to get the profits of the company, but also rendering some service to the society. That is known as here social responsibility of the company. So here the process of evaluating the code of conduct, procedure, how they are following, and the etiquettes of the company, and other factors that affects the society will be considered in the social audit. Social audit consists of the morals, ethics, values of the company. Next, external audit. So external audit is another term, and it is another type of audit where the first category under external audit is forensic audit. So generally it is done by the forensic accountant. So what do the forensic account or for accountant or audit will states? So generally they examine accounting accounting details, and also they investigate the accounting details, and they find certain frauds, and if any crime taking place in the organization. For example, some companies we will see in our nearby places also, the company or the shops, if it is not working well, generally what do? uh, they themselves they do the fire accidents, and they say that it is done unfortunately. So it is a fraud, it is a crime for getting insurance claims. This type of frauds will be done. So to identify such a type of frauds in a company, so we are going to do with the forensic audit. Next, IT audit, information technology audit. So it specifies the reliability of the security system. Generally, nowadays transactions are done through online, so we need to check whether the company is following the protocols or not, like TCP/IP protocol, HTTPS protocol, Shen protocol, SET protocol. There will be various protocols. Each protocol aims at providing security to the websites. So IT audit focuses on the security system uh, to the transactions and to who are involved in the company, like providing security to the employees and providing security to the final customers. Next, value for money audit. It is another category. So value for money means here generally it considers three factors: economy, identifying the economy, identifying the efficiency of the organization, and identifying the effectiveness of the organization. So how far it is effective, and what are the skills, that is known as efficiency. And economy, right? For knowing the money transactions or monetary transactions, so it will fall under value for money audit. Next, special audit. Generally in a company, if any fraud or if any uncertain if unexpectedly if anything is happened, so such a type under that situations they conduct a special audit. Special audit is done when there is a need in a company, when the transactions are not matching, and if auditor finds any error or any untraceable values, untraceable records, then such under that case they do the special audit. Next, operational audit. Operational audit focuses on the internal system, internal control system. Generally, it covers the productivity of the company and efficiency and effectiveness of operations of transactions. So these are the various types of audits. Government audit. This is most important audit. You may get in short question also. So government audit is applicable to the government departments. So who will involve or who has an authority to maintain the government audit? Comptroller and Auditor General of India. That body is the head of this department. In India, the president appoints the Comptroller and Auditor General of India. Under Article 149 of the Constitution, so that type of auditor will give powers and rights to assess the government audit of the government departments. So, for example, we have various government departments like defense, railways, post offices, and telegraphs, audit, etc. So, these are the various companies. These are the various organizations where the auditing is being done for these organizations. Next, commercial audit. In the name itself, the commercial audit means here it is a statutory audit. Generally, business requires this type of audit for various reasons. So, for example, if accounts are maintained for the commercial institutes, to know the transactions details, to know the overall turnover, so we conduct the commercial audit. Next, compliance audit. So, compliance audit focuses on policies and procedures of the department of the organization. Generally, every company have its own policies and procedures. So it will check, the compliance audit will check whether the policies and procedures are implemented according to standards or not. Next, construction audit. So this is another type of audit. Generally, it includes the construction by the contractors, and it prices paid and overhead costs involved in the various contracts. So it will be assessed. Next, systems audit. In this type of audit, system is an organization. System is known as organization. And the overall organizational assessment is done, and overall observation is done. Then later report is being prepared based on the, if any deficiencies are there in the system, that will be reported, and those suggestions are given for the better improvements of the organization. Next, we have unit 3 in the block 1, standards of auditing. Yes, ma, are you there, all of you?
Yes, ma'am.
Okay, are you following?
Yes, ma'am.
Okay, fine. So unit 3, we
Ma'am,
have
what about unit 2
standards of
important questions?
auditing. Important questions I will give, I will dictate to you after completing the class. Okay?
Okay, ma'am.
Okay, fine. So standards of auditing. So generally, standard is an agreed commitment or way to do something. See, for example, making a product, there will be a standard. And delivering or providing the services, we follow the standard. Material standard. And collecting the raw materials from with the standard suppliers. So generally, standards are essential for the improvement in the organization. So standards are useful to compare the actual with expected. The present, we are getting so and so turnover, and what we are expecting in future, we can assess if we have a standard or base in our plan. Next, standards will give guide to the staff to present quality of work. So there must be, see, standard mentioned set of rules, set of norms. So every organization has to follow the quality in their performance, in their products, in their services. So with the quality only, by providing high quality, we will be unique. If we are providing poor quality, poor services, no potential and no present customers will be with us. So next, auditing standards specifies the verification of financial accounts, whether the financial accounts are maintained perfectly or not. We can assess here. Next, auditing standards can present reports, believable reports. With the help of standards, we can believe that report is correct. Next, standards useful to perform factual information, correct information to the various departments. So next, establishment of standards will enhance the name and fame of organization. See, we will see a particular company. It will be standard in all aspects. So what is that? If they are standard, obviously they get the name and fame. They will shine in the market, and their brand will be in the mouths of all consumers. So that is known as here power of standards. Next, role of Institute of Chartered Accountants of India, ICAI. What is the role of ICAI? So it is a professional accounting body. It was established on 1st July 1949, and it is a statutory body and regulates the profession of chartered accountants in India. So what is the main qualification, and what will be the main aspects which will be under the accountancy means here? The institute's primary, the ICAI primary function is to prescribe the qualification for membership and conducting examination and making arrangements for practical training of candidates, and publication and maintenance of registers of members qualified. See, as a chartered accountants, they will do CA course. Then after they take the internship, and then they will be ratified by the so and so training or organization. So everything is being checked by the ICAI. Next here, they assess the qualifications and training performance, and practical training performance of the auditor. Next, need for accounting standards. Just now we have covered accounting standards. Now. So as accounting standards, see, if the accounting transactions are maintained with accounting standards, there will be no errors. So generally, the auditor's work will become easy once we follow the accounting standards. Means what here? Following true and fair financial recording of transactions must be done. Next, audits under the EDP environment. So, electronic data processing. EDP stands for electronic data processing. So, as the name itself, electronically maintaining or electronic data processing. So, generally, it will be maintained with the computers. So, since the accounting involves recording, analyzing, processing, and interpreting of financial data, the accounting influences the details. The accounting details influences the records in the computer system. So, audit under EDP environment means maintaining the records of various organizational details in an electronic system. Nowadays, everything is online, right? We are filing our IT returns online. Organization posting or maintaining their records, financial statements in Tally or in SAP or in any other platform like MS Access we have. Everything is done online with the help of various software. Next, auditing is a process of objectively examining and evaluating the financial statements of a firm to ensure that the records are fairly and truly presented or not. See, the main goal of auditing is to check whether everything is recorded according to the actual and according to the present record. What, see, for example, if expenses are incurred 50,000, it must be recorded as 50,000 only. If it is recorded as 45,000, it is a mistake. If it is recorded as 55,000, it is a fraud. So it must be recorded exactly. So what is happening? It must be recorded exactly because it reflects the final profits of the company. So if expenditures, if we are showing more, then what happens? There will be chances of reducing the profits of the company. Isn't it, ma? We need to record exactly what is happening. We need to show the fair contents in the transactions. Is it clear, ma? All of you?
Yes, ma'am.
Okay. Okay, now you take questions. Questions you take in the, here we have finished unit 1 and classification audit. You take class types or classifications of audit. That question you take. Types or classifications of audit.
For long questions, ma'am.
Yes, long question, ma. Long question only.
Okay, ma'am.
All types you prepare. Next, types of audits and their objectives. Classification we have taken. Next question, types of audits. I have displayed on the screen. Question, you see. The PPT I have displayed on the screen. Slide number 17. This one. Types of audits and their objectives. Have you noted, ma?
Yes, ma'am.
Okay. Government audit, most important. Government audit.
Yes, ma'am.
Okay, fine. Next, standards of auditing. You take another question. Standards of auditing. Discuss various standards of auditing. Next question. Role of ICAI. Role of ICAI. It is on the screen. You see the question, ma? Role of ICAI.
Yes, ma'am.
Okay. Next, you take audits under EDP environment. Another question. Audits under EDP environment.
Yes, ma'am.
You take my mail ID. I am giving. If any queries, you contact to me to this mail ID. All of you note down. You can mail me for any queries. Everything is clear, but in spite of that, if you want to talk, discuss anything, or you can do with this mail. You can communicate to me. Note down
Okay,
this
ma'am.
mail ID. Okay.
Okay, ma'am.
Note down all of you mail ID. And also, all of you, you try to finish the preparation of this block 1 immediately. Don't, whenever you make a plan and finish the preparation, ma.
Okay, ma'am.
Don't delay. Don't delay. Okay.
Okay, ma'am.
And wait, and we have some time. So we go with, in this, do you have any doubts, ma?
No, ma'am.
Okay. So tomorrow's class, just I will give brief idea. What we are going to discuss, I will give brief idea. So in the tomorrow's class, we have here mm, auditor and role of auditor, auditor and execution of an audit. Next, qualifications for appointment of auditor and qualities of an auditor. We have these topics. Second block, remuneration of auditor and powers, rights and duties of an auditor and disqualifications of an auditor and audit planning and procedure we have and audit engagement letter, commencements of audit. These all are the various concepts we are going to discuss in the tomorrow's class. Again, same 7 to 8 again tomorrow. All of you.
Yes, ma'am.
7 to 8 again. Tomorrow, second class, we have 7 to 8.
Yes, ma'am.
Okay. And we will begin block 2 tomorrow.
Okay, ma'am.
Okay, ma. So now you relax for some time and you take you have another class, I think so.
At 8
Now you
o'clock, we
have
have another
another
class.
class. Yes, you have another class now.
Yes, ma'am.
You
At
take
8
break
o'clock.
for 8 o'clock only.
Yes, ma'am.
Okay. So okay then we will meet again tomorrow.
Okay, ma'am. Thank